Good afternoon, Somit. My sense is that you could possibly see some stability in the mid cap, small cap, broader market indices. Considering the fact that I think most of the retail investors who were in panic for the last couple of days, they have obviously taken a call to exit positions because panic spreads very fast. And I think the way stocks like Anantraj or typically Apar, which have gone down by almost more than 20% in the last just 2 to 3 days, clearly indicates that because of increased volatility, investors who are not able to hold on to their long positions are preferring to, book, losses at whatever price they get. But I think the medium term picture does not look that scary. I think, if you look at many small and broader, small and mid cap companies from the broader market, I think Q3 numbers have been fairly decent. Management commentaries have been good. So I think, some stability will definitely come in. But again, it's a case to case kind of, stock opportunity. I don't think the broader market is going to jump immediately because, flows to these stocks are not coming. In fact, most of the FI buying is happening in the large cap stocks. In fact, the selling also has started happening, from the larger, investors like PMSs, AIFs, which had actually invested a lot of money. So I think clearly here you will see volatility at least for the next 3 to 4 months. So I think it's going to be a selective call. We have been telling our clients to actually be cautious here. But yes, on a stock specific basis, the valuations come up to an attractive level, and where the management commentary is good, the order book is good. I think we definitely are also suggesting investors to actually nimble in a small quantity, but only a limited amount of capital because the way the markets are going, I think any near term upside will depend on how the budget materializes, in the coming week.
Right.
Most of these quick service companies are not generating any cash flow. They're not generating any positive EBITDA. So basically, initially when the stock got listed, the narrative played out. And I think you saw many foreign institutional brokerage houses also giving, strong buys for this counter. So I think, business is growing rapidly. But I think the markets would also like to know, when these companies would actually generate profit. So I think it's a long way before we could see operating EBITDA turning positive or cash flows turning positive. So I think, even at these levels, somebody is looking for a short-term upside, it does not make a worthy kind of addition to the portfolio. Somebody who's got a 2 year kind of timeline can definitely think of adding a little more of Swiggy because within this market there are just two players, Zomato and Swiggy, and I don't think competition is going to hurt them. I think they are very well positioned in terms of their geographical reach and in terms of their technology kind of which they use. So I think longer term, yes, they will do well, but short term, I don't think you're going to see a very big bump up. Yeah, I think numbers should be in line. I think if you talk specifically about Bajaj Auto Somit, I think clearly, as Puneet mentioned, a decent amount of operating leverage and better margins. I think margins have been slightly better because of cost optimization. Most importantly, the volume growth is definitely disappointing, and I think the market would obviously like to know coming quarter, that is January to March, so fourth quarter and the coming year, what's the kind of outlook the management would like to share? Because looking at the kind of rising inflation, some sort of cutback in consumption, two wheelers are also to that extent, demand has been impacted. So I think we'll have to see how things move ahead. But any kind of positive surprise in the coming budget could possibly give a big leg up to all the two-wheeler players, including Bajaj Auto. So I think numbers are definitely decent, but the commentary, I think, Somit, is going to be crucial. What kind of outlook on margins and what kind of outlook on the export market? And plus domestic market growth, because volume growth of 2-3% is nothing great to cheer about. I think the markets would obviously like to see double-digit growth, and that is what the management, would be asked. And I mean, the commentary from the management side will be very important to hear. No, I think numbers have been pretty in line. I think, very strong volume numbers, very good profitability numbers. But I think at these levels, Somit, to expect the stock to be a multi-bagger or to give a very big upside is very limited. I think valuations are not cheap; they are fair to expensive. So I think, somebody who's holding on to TVS can definitely continue to hold. Fresh buying is not advisable because, at these levels, very strong alpha, from these levels doesn't look possible. So I think, they operate in a mature industry, and despite good numbers, I think, the stock appears to be fairly priced. So I think it's a hold from our side. No, I think, Somit, my sense is, the profitability expectation was much higher, and I think the markets were disappointed by the performance put up, both on a quarterly and a YY basis. And I think clearly, markets were expecting a little tad better. So, the price has been beaten down largely because markets are not expecting anything significant to happen in the near term. At least the fourth quarter is also expected to be on similar lines. So my sense is that there are probably other investment opportunities. This sort of selling is nothing but profit booking. It's not that growth will not kick in again. But clearly looking at these numbers, I think the valuations of this stock looks to be pretty fair, expensive. So that is one of the key reasons the markets have given a big beating to the stock. And wherever we see earnings disappointments, Somit, I think the clear indication is that market punishes these stocks very badly. So that's why you're seeing the stock down by 15%. And at least in the very near term, I don't think any bounce back can happen, immediately in the near term. No, I think CDSL, first of all, has been a big disappointment. I think nobody expected these numbers from CDSL. And I think that's why the stock was beaten down yesterday, and today also the stock is down. See, I think unless and until the market gets some strong visibility on the kind of growth numbers, because despite the fact that capital markets have been volatile, new public issues, new capital offers have obviously ensured a steady growth of depository kind of customers. And I think somewhere, I think markets were looking at a stronger growth because of this factor. My sense is CDSL currently at least looks to be, now in a very strong kind of a small range. So I don't think you're going to get a big upside in the very near term, unless and until we see very strong numbers from depository participant additions. In the short term, any re-rating looks to be very difficult. And as far as BSE is concerned, Somit, I think clearly, the exchange business obviously is a function of how the market does. Whenever F&O volumes or typically the overall volumes in the market get impacted and the market turns more volatile, you find that exchanges obviously report a volatile set of numbers. So here also, I think unless you've got a 2-year kind of timeline, because here the big trigger for BSE is the listing of NSE, which is probably going to happen, after some time. But overall, I think, in the short term, definitely the stock will remain under pressure. So I think, BSE could be a good long-term accumulated kind of candidate, but provided somebody has got a 12 to 18 month kind of time frame.
Right.
Somit, the market always becomes pessimistic in the short term and forgets what's going to happen in the longer term. So I think we are pretty confident that this kind of scare from China in terms of their AI DeepSeek is unlikely to create a damage in the very near term. In the longer term, how it plays out, what will be the impact on chip prices, I think it still remains to be seen, because you cannot estimate the opportunity or the damage for these companies in just a couple of days. So I think whatever reaction you are seeing in companies like Keynes, or for that reason, I think most of the data center providers, companies like Anantraj have also been down by almost 30 odd percent. So I would say that investors should not panic. I think let the water settle down, and I think over a period of time you could possibly see these companies bouncing back. In fact, Anantraj is putting a 300 megawatt data center, and out of which only 28 megawatts is going to be operational by March. So I think it's too premature to believe that everything is lost and things will not improve, because core demand wise, I think data centers will continue to do well. So I think coming back to the main issue, I would say that this is an overreaction. I think you need to wait patiently for some time. And since there is a lot of panic in the market, I think you're seeing a lot of selling by retail as well as some institutional clients, but fundamentals continue to remain safe.